Do you know how to use Bollinger Bands for your crypto trades? If you sell your crypto when the price touches the upper band or buy when it reaches the lower band, then you should stop, because that's a costly mistake that can lead to potential losses. Keep watching and find out more about what are Bollinger Bands, how they work, how to use them to enhance your trading strategy. Please remember to give a like to our video and subscribe to our channel for more insights on mastering crypto trading. Now let's dig into Bollinger Bands. These are invaluable tools for analyzing price volatility, identifying potential trends, and making well-informed trading decisions. Whether you're trading Bitcoin, Ethereum, or any other actively traded crypto asset, Bollinger Bands can be applied across multiple time frames to help you navigate the market more effectively. At their core, Bollinger Bands cover three key components. The middle band. This represents the 20-day simple moving average of the closing prices. The upper band. This shows the number of standard deviations, usually 2, above the middle line. The lower band. This shows the number of standard deviations below the middle line. One crucial concept to understand is the squeeze. This happens when the upper and lower Bollinger Bands converge, signaling low volatility. The squeeze is a powerful hint that a major price shift could be on the horizon, presenting prime trading opportunities. When the market is calm and volatility is low, many cryptocurrency traders see this as the start of significant price moves. After a squeeze, you should keep a close eye out for a breakout. A decisive move above the upper band suggests a long trade, while a move below the lower band points to a short trade. These breakouts can offer optimal moments to enter or exit positions, making them crucial for strategic trading decisions. So, how can you apply Bollinger Bands in your trading? Here are some key strategies. Measure volatility. When a crypto asset's price becomes more volatile, the distance between the bands widens, signaling potential trading opportunities. Identify trends. If the price is above the middle line and near the upper band, it suggests an uptrend and potential buying opportunities. But if the price is below the middle line and near the lower band, this indicates a downtrend and potential selling opportunities. To further enhance your strategy, combine Bollinger Bands with other technical indicators like Relative Strength Index (RSI). If the price nears the upper Bollinger Band and RSI indicates overbought conditions, it might signal a trend reversal. Moving averages. Integrate moving averages to add more context to trend analysis. For example, a MACD crossover can support trend change confirmations. Stochastic oscillator. Look for overbought or oversold conditions within the bands. When combined with the stochastic oscillator, you get a clearer picture of market sentiment. As you can see, Bollinger Bands are versatile and powerful tools for crypto traders. They provide crucial insights into price volatility, potential trend reversals, overbought or oversold conditions. By integrating Bollinger Bands into your trading toolkit, you can make more informed decisions and improve your strategies. Feel free to share this video with whomever you think will find this information useful. Thanks for watching.